challenging since mid-January, and situations like these can easily create anxiety. So I thought I'd touch base with you and just connect. Now, just to provide a little context, the market started 2018 very well. It was, take a look at this chart, it was up about 8% at the high water mark. But then, almost immediately in the latter part of January, the market dropped over 10% from that high point. Now, if you look at the entire year, for all of 2018, you can see that the market is down about 2%, even though it feels much worse. So if you are feeling anxious, some of that anxiety might be because you're looking at the high point to the low point, rather than the performance since the beginning of the year. If you look at the performance since the beginning of January, things don't really look all that bad. But no matter what, how you look at it, you know, this has not been an easy period for you, and I know that. Now, be that as it may, let's look at what's behind this market turbulence. First, the market's done really well for a very long time, and it's very sensitive to bad news, so it sometimes reacts and overreacts. And second, yesterday President Trump got into a war of words with China over trade. Now, keep in mind there is a possibility of a trade war happening, but it hasn't happened yet, and it may be averted quite easily, despite the verbosity. Now, as we've seen before, events like these happen all the time. It's par for the course. The market on average has interim losses of, on average, 14.2% every year. Now, this could be another one of those events which quickly corrects itself, or it could be something a little bit more threatening, which could lead to a bigger market drop and even a bear market that could last for a while. The problem is, or the important thing is, to have a way to know the difference. There's no perfect way to know. But as I've explained several times, what I do is I use a numbers-based approach to try to differentiate between corrections and bear markets. It's not infallible, it's not perfect. It's done a pretty good job. It's not a guarantee of the future, but it's worked pretty well for us up until now. Now, it doesn't mean that we can avoid all the damage of a declining market. We may be able to limit the damage, but we can't completely avoid it. And that's the reason why I wanted to connect with you now, is to assure you that I'm monitoring the situation and I have a plan. The plan is based on numbers, not feelings. And again, it's not perfect, but it's far more reliable in my experience. I'll keep you posted if the situation warrants it. As defined by my filter, I will take defensive action, raising cash. And if that happens, I'll let you know. Right now, the filter has not been triggered, so we may continue to ride through it. Either way, I'll keep you in the loop, but let me know if you have any questions or you'd like to talk. Thank you.